الحمد لله رب العالمين والصلاة والسلام على سيدنا محمد وعلى آله وصحبه أجمعين. Ladies and gentlemen, distinguished participants, dear colleagues, Assalamu alaikum wa rahmatullahi wa barakatuh. It gives us a great pleasure indeed to welcome all of you today to this public hearing event, considered an advanced interaction stage with the Islamic finance industry and the broader circles of stakeholders, all in a series of public hearings being held for two newly issued exposure drafts. Now, depending on today's number, we may have only discuss only exposure draft of one standard on prizes and gifts and prizes, and postpone discussion of the other to another public hearing session. This aims to reach out to subject matter experts and practitioners worldwide on first, and hopefully we can do that for these two exposure drafts today. Exposure draft on promotional gifts and prizes offered to customers who hold investment accounts with the institution. This standard prescribes accounting and financial reporting principles for recognition, measurement, presentation, and disclosures applicable to promotional gifts and prizes awarded by Islamic financial institutions to their customers, including quasi-equity and other investment account holders. The second standard, according to the plan, and as I mentioned earlier, we may confine our session today to the first standard. Anyway, the second standard, as per our plans, was an exposure draft on financial reporting for Islamic investment institutions, including investment funds. This standard provides financial reporting principles applicable to the Islamic investment institutions. In particular, this standard emphasizes on bringing harmony and standardization with regard to form and content of the financial statements of these institutions. The standard prescribes the overall requirements for the presentation, minimum contents, and recommended structure of the financial statements of these Islamic investment institutions in a manner that facilitates a truthful and fair presentation in line with the Sharia principles and rules. The public hearing today is conducted live via video conferencing, and participants are joining us from different time zones worldwide. So we would like to welcome you again, and we really appreciate your keenness to join us today for this very important event. Today's session is being conducted with support from one of our prominent and key partners, the State Bank of Pakistan. To them, we would like to express our sincere thanks for the usual support. The representative of our supporting partner, Mr. Zulfikar Kokar, Additional Director, Islamic Finance Policy Department, State Bank of Pakistan, is with us today to address you with a welcome note. Mr. Kokar, the floor is yours.
Bismillahirrahmanirrahim. Thank you, Majid. Honorable Brother Umar Mustafa, the AOIFI Secretariat members, and all the participants that are listening to us at the moment. Welcome to this webinar, and please accept our best wishes for your endeavors in promotion of Islamic finance. In terms of, just to give you, you may be aware, but just to give you a brief overview, where the relationship of Pakistan with the international infrastructure institutions, and then the work of international infrastructure institutions that's going on is very paramount to Pakistan and all the Islamic finance industry globally. Pakistan is the founding members of almost all of the leading international infrastructure institutions that are working for the promotion of the Islamic finance. Especially the work of AOIFI has been very well received, not only in Pakistan, but globally as well. The Sharia standards of AOIFI are almost the minimum standard that every country is following at the moment. And then the governance standards and auditing standards of the AOIFI are also used extensively across the board. As far as the accounting standards are concerned, there is a mixed practice, but still the use of accounting standards issued by AOIFI is a very, very important and pioneering work in the field of accounting and for the Islamic finance. So we always appreciate the work done by AOIFI, and our support is always with this institution, which is doing the groundbreaking work for the Islamic finance. In terms of what Pakistan does and how Pakistan benefits from the work of AOIFI, as you may be knowing, Pakistan is one of the leading Islamic finance promoting country in the world. We were perhaps one of the few countries that started Islamic finance way back in the 80s, and currently Islamic finance is a systemically important area within us, because we have crossed the 15% benchmark. We are way above it. So we are around hovering now, 25% of the market is with Islamic banking. So in terms of the Sharia standards, we have almost adopted all important Sharia standards in Pakistan of the AOIFI. The governance standards have been used extensively in terms of the Sharia governance framework that we have in place in Pakistan, and that we are also using accounting framework. So that must be the case with most of the jurisdictions that are listening to us at the moment. The work of AOIFI has been very, very important for all of us, and we have been using it. So all credit goes to AOIFI, their previous management and the current management led by Brother Umar, and they are enhancing the work that has already been done, and they are promoting it further. And this is the one step of the whole process, whereby the standard goes through a rigorous internal reviews, debates, discussions, working groups, and so on. Then it is also presented before the general public to have their views as well. In terms of today's first standard, accounting standard that is going to be discussed, the other has been, just as the Majid has informed, has been postponed. So from a Pakistani perspective, the lucky draw prizes, gifts, or loyalty programs perhaps is not that common in Pakistan for the investment account holders, because we also have some regulations because of that. These things are not perhaps offered in the market, but still I can understand these things are also offered in Pakistan for the remittance market. And perhaps globally, these loyalty programs, lucky draws, and gifts may be a common practice in few of the jurisdictions. So it's an important new area, which is now AOIFI has also come up with an accounting standard for that. So we look forward to the input across the globe, the participants that are listening to us at the moment. And based on your feedback, AOIFI, in consultation with the stakeholders, moves ahead. So I would like all of you to please give all your input. And first of all, thank you thank you for sparing your time, and please give your input so that this accounting standard and the future accounting standards are aligned with the best practices and the realities of the market on ground. So thank you very much.
Thank you, Mr. Coker. Thank you indeed for your insightful remarks on the exposure draft and AAOIFI adoption reality and application status in the state of Pakistan. We do appreciate the efforts exerted by the State Bank of Pakistan for supporting AAOIFI standards, adoption of these standards, and other various activities in the industry in Pakistan. Ladies and gentlemen, distinguished guests, I'm pleased to invite to the virtual floor Mr. Omar Mustafa Ansari, AAOIFI Secretary General, who will present the exposure draft and walk you through its main content, while interactively replying and answering your questions and the inquiries, addressing your comments. As we always say, all relevant comments and suggestions will be collected and presented to the respective working group to consider and make the changes it deems appropriate to the exposure draft. Mr. Omar Mustafa Ansari, I'm handing over to you, please.
Thank you very much, dear brother Majd, and thank you very much, my dear brothers of Art Hooker. أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. Ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuhu, and good morning, good afternoon, or good evening, depending on from which part of the world you are joining us. Today we have a challenge. It's a challenge actually to manage two public hearings in one go. The standard on gifts and prizes is a bit smaller one, and this one is this is the fourth public hearing. We already conducted two public hearings in English and one in Arabic, so it's like the last public hearing for the gifts and prizes standard. Although it's a short standard, but I recall earlier it also took some time to discuss some of the things. Now I think that we'll start from this standard. And today, although we had a reasonable number of registrations, but the attendance is slightly, slightly on a lower side. So we'll see whether the management of time is possible as well as if enough attendees are available. So let's first go through this first standard in detail properly, and then we see whether we can manage, and particularly considering the attendance position. But whoever has joined us today, we are so much thankful to you for sparing your time, for your valuable time, precious time for this cause. And this is your very important contribution towards the standard setting process, that you take out time to provide comments, to take an understanding and respond according to the market issues, market challenges, implementation issues with regard to these standards. So let me share the screen with your permission, but I think that at the same time, I need to provide you some background with regard to this gifts and prizes standard. So while I share my screen, let me take you through a little bit background about that. In 2021, I think we initiated the revision process. 2020 or 2021, we initiated the revision process for FAS 27, Financial Accounting Standard number 27, on investment accounts. And during that, obviously, a lot of new things opened up. So FAS 27 was revised in form of multiple standards. And also we revised the transfer of asset standard to align with that and to put in the additional challenges that were identified during the initial discussion and research phases. One of the aspects that was identified in some of the markets, particularly the GCC markets, that there was an ongoing trend, an increasing trend of having promotional gifts and prizes with the investment accounts, offering with the investment accounts. There were unique products like, a Sukuk al-Watni from UAE, which actually started a prize bond type model based on that. It is technically, Sukuk al-Watni are technically prize bond type product, which are like conventional prize bonds, which are there in conventional. The difference is that there is a mudarba structure and then there is a prize. AAOIFI had Sharia board had developed and issued a earlier standard on promotional gifts and prizes on the Sharia side, which provides some guidance on this part. While developing the Sharia standard and accounting standard, I would like to say that our purpose here is not to promote these practices. Let's be honest that anything like this, which has an element of, sorry to say, a lottery or other things, there can always be arguments whether this is in line with the objectives of Sharia, whether it's in line with the conceptual underpinnings of Islamic economic system, etc. But yes, we need to understand that at times some of the things may not be preferred, but are permissible, subject to conditions. And again, at times there is a very thin line between what is permissible and what is not. We all know that excessive gharar, that is gharar kasir, gharar fahish, or the element of maisar or qimar, these are prohibited by Islam as very clear prohibitions. Particularly any form of gambling, any form of qimar are very clearly prohibited. So this is one of the fundamental prohibitions like riba. So the point is that these products should be even if they are offered and if they are considered permissible, there is always a very thin line to manage that. And that thin line needs to be maintained according to Sharia. And even on the accounting side, some of the aspects of that thin line are to be maintained with regard to the recording, reporting, and the presentation and placement of the relevant expenses and things. Now, let me just try to explain that the standard that we have developed right now includes promotional gifts, prizes, and loyalty programs. However, there had been an argument earlier on this point, and we had discussed this thing with IASB, Islamic Finance Consultative Group as well, that maybe the common loyalty programs shall be dealt in accordance with generally accepted accounting principles, because you are all aware that AAOIFI's accounting standard setting strategy clearly states that we develop accounting standards in addition to conventional standards only where there is a value addition, and that value addition means that either there is a very specific Sharia requirement with regard to some matters, or otherwise this unique business model of Islamic finance and the transaction structure under Islamic finance is different from conventional, and hence we need to clarify on the accounting part. So considering these aspects, it is one of the most important questions on which we would request your comment as a whole in writing, or today in form of your comments and later maybe in writing, that do you think that loyalty programs and promotional gifts and prizes, everything should be included in this standard? Now, again, about gifts, the issue is simplified, not that much issue. The main issue is the prizes that are on a long-term basis, that is, and particularly the prizes which are on the investment account side, because even the prizes can be on the asset side, but we are talking about prizes which are primarily on the quasi-equity. And again, to clarify that according to Sharia standards, prizes cannot be offered on current accounts. If offering prizes on current accounts would be creating a structure similar to conventional prize bonds, which are not accepted by majority of scholars, and for sure not accepted by AAOIFI Sharia standards. So maybe this was a bit of a background that was necessary to understand. Let me just take one more minute on explaining how okay, we can discuss this part when we discuss the definitions. So with your permission, now I'll take you through the standard. I have provided you some background, so preface and introduction. Normally, we do not cover in detail. Only thing is, if anybody has comment, please feel free to provide. Just one thing, as I requested earlier, please put your comments on the Q&A tab so that those can be responded. I saw a hand raised earlier, but maybe due to limitation of time, we may not be able to allow all of you to speak up. But at least we can have we can have at least an opportunity towards the end if we have time to allow you to speak up as well. But please put not in the chat window, but in the Q&A tab all the questions and comments that you have, and our team has provided a link to the standard. For those who request the presentation, just to mention that presentation is just the exposure draft in this format, and that we do not share as a matter of policy. But the exposure draft in the PDF format is available, and the link for that is already provided in the chat window by our colleagues. So with that, I'll take you through the objective of the standard. The objective of standard is to prescribe the accounting and financial reporting requirements applicable to promotional gifts and prizes awarded by Islamic financial institutions and the institutions to their customers, including quasi-equity and other investment account holders. So the main issue which we have to discuss here is that from the perspective of some of the stakeholders, it was discussed that AAOIFI should not be duplicating the matters related to loyalty program and gifts and prizes, although this standard simply says that these are to be addressed in line with the generally accepted accounting principle, particularly for loyalty programs. However, the unique aspect for Islamic finance is the quasi-equity and other investment account holders part. I think I missed out one thing in the brief introduction, which is very important to understand for Laz brother, our dear brother, Zulfikar Khokar also mentioned that it's not common in Pakistan, and there is a long list of countries where these programs are not common, either due to regulatory restrictions, because some of the regulators don't allow these, and I think even Central Bank of Pakistan also did not allow it earlier. But the second issue is that it's about, the business practice, what is there. So why it became more common in the GCC, first in the conventional side, and then it picked up on the Islamic side, because before COVID and during COVID, the interest rates have been on a very lower side. And if your investment returns are less than 2%, 1.5%, or something like this, then there is no incentive for people to keep money with the respective banks, either on Islamic or conventional. So that incentive of a very low return is never enough, mostly in these markets. And people try to divert their investments to different areas, including real estate, etc. Or maybe even in where the restrictions are not that much, then at times placements are done out of the country. Now, what happened that in that time, the conventional banks initially started this thing, and then Islamic banks also came with the same way, that although the interest rate or the rate of return for the depositors or investment account holders was very low, but they sweetened it by offering promotional prizes. So what happens that although you are getting only 1% return, but you by keeping your deposit with this bank, you enter into a lucky draw automatically to get a chance of winning X amount of money. Now this additional charm was used for the purpose of convincing investment account holders and depositors to keep money with the bank. So technically speaking, it has been a debate whether it's and this is one of the most important debate in this standard, that whether this cost is cost of fund that is technically considered, or is it a marketing cost. So this is one of the issues that most important issues that this standard has addressed. I'll come back to that, but let me here take another example of conventional price bonds prevalent in multiple countries. Now, what happens in the price bonds is that price bond is issued by the government. The main amount is guaranteed. That is, the principal amount of that is guaranteed. So government considers it like a loan from general public. And then whatever interest rate government needs to announce on that interest is not paid on a uniform basis to everybody. Rather, there is no interest paid in that way. Rather, it is only a price that is announced, or a series of prices that is announced on each series of price bonds, which makes price bonds a sort of a gambling instrument. But again, difference with from the conventional gambling is, the traditional gambling is that nobody loses out their money. Their principal remains secured. Nobody loses out their money. Only thing is that the interest that was supposed to be paid by the government to everybody on a uniform rate basis is now distributed between some people on a lottery style or random selection basis. The conceptual part of price bond is like this. So in practice, when it came to scholars whether the price bonds are permissible or not, because the main principle remains secured. So unlike gambling, you don't lose your principal. So there is a minority of scholars who allow it on this premise, that a price bond, a conventional price bond issued by the government, is acceptable because the principal is secured. So this is just a gift by the government given to any selected people, and this is acceptable as per Sharia. However, the majority of scholars and the approach taken by AAOIFI is like that this structure has interest on one hand and gambling on the other hand. So this is structure, because on the government end, it is like a structure that fixed amount is to be paid, and it's like, it is mashroot, that X amount is to be paid collectively to the investors in the price bond, irrespective of how the distribution is done. So at the end of the government, it becomes an interest, and in the hand of the price bond holders, it becomes interest club plus gambling. So that is the reason that majority of the scholars and AAOIFI's approach with regard to gifts and prizes does not allow price bond type structure, that is a price bond or a prize mechanism on current accounts. Now, I was just trying to explain the structure. Now, the difference here is that we have a Mudarba account and then we do this thing. So this conceptually changes the conceptual underpinnings, where the Mudarba is there, Mudarba based profit is there, and then the Rabbul Mal, the Mudarib comes up with a incentive on its own discretion to be distributed to the investment account holders. So the question of whether it's a funding cost or it's a marketing cost comes completely different. So here the incentive is offered to induce and invite more and more investment account holders as a marketing effort. And considering it from our purpose, from AAOIFI's purpose, we consider it as a promotional and marketing activity and not as cost of funding. And we do not consider it to be calculated, to be paid out of the calculated profit of Mudarba, but only out of the share of the Mudarib at its own discretion. Now, on the other hand, if you have taken the other approach, that is with regard to making it mandatory and making it conditional and making it part of the Mudarba computation mechanism, that approach is not accepted by official Sharia standard. In the prize bond for the government purposes, any prizes that are given from the government purposes, from their accounting purposes, they are, or any similar model offered by any conventional institution, they are considered to be cost of funding. But here we cannot consider, again, we don't have a cost of funding in Islamic finance. For us, it is a distributed profit to investment account holders. And from our perspective, this is considered to be not a distribution to investment account holders, but a promotional activity carried out by the institution as a Mudarib who pays out the prizes to the convention to the investment account holders. Maybe I have taken a bit more time in explaining it, but I understand that some of the markets don't have this product, so it was necessary to explain. And not only this, but even the markets where this practice is there, particularly the GCC markets, the confusion is still there with regard to whether it's cost of funding and all that. Now with that, I'll take you through the standard. I can see no comment raised till now. Okay, no, there is one comment in the Q&A tab. Okay, we have a comment from our very respected brother Sadaqat. Assalamu alaikum. And the allocation of common staff expenses between Mudarba pool and shareholder. Staff expenses incurred on common and staff involved in marketing the products relating to Mudarba pool assets and deposit product related to shareholder should be covered appropriately toward mistakes in charging these expenses. Brother Sadaqat, highly appreciated your point, but it's not part of this standard. It's part of the quasi-equity standard where we have actually covered it. So thank you very much for raising a very important point, sir, like always. But this is not the subject matter of this standard, and the other standard actually covers it. This thing has to be done according to the contractual obligations and the fair market practices. So we have covered that part. Thank you very much, sir, for an important comment. So now, one most important question that I already raised to all of you is that shall we cover whole of the scope in this standard, or shall we limit it to the promotional prizes only, which is the real value addition of this standard? So this is one question. I think last time we created a poll in the public hearing. So Sister Saira, if you can create a poll, it will be good. That if we can have a comment from everybody and as a poll, that whether they believe a standard is good in its shape, or they want that we exclude the loyalty program and the gifts part from it. Okay. Now, coming to the scope, the standard applies to promotional gifts and prizes, including loyalty programs announced and awarded by institution on behalf of owners and out of the amounts attributable to owners' equity to all specific customers, all specific customers, including quasi-equity and other investment account holders. It can be done even for RIA accounts or other similar structure. The standard shall not apply to HIBA provided by institution on behalf of the owners as a profit smoothing technique during the computation of periodic profit. So just to keep the difference, here we are talking about the gifts which are given to the customers as a promotional activity. So we have used the term promotional gifts. HIBA also is translated as gift, but that HIBA is waiver of the profit. Technically, it's a waiver of the profit portion of the investment account of the institution in the favor of investment account holders. So that is excluded, and that is to be covered in FAS 45 quasi-equity, including investment accounts. Promotional price in the specific context of the standard is a price used to promote specific products or service or to attract investors by way of holding a draw or by achieving a defined target or a combination of both, which is awarded at a given point of time in future. Promotional gift in the specific context of the standard is a gift used to promote specific products or services or to attract investors that is awarded by an institution from time to time to certain customers. Loyalty program is usually in the form of points accumulated by the customers against purchase or continued utilization of products or services or for maintaining investment accounts, enabling the customers to exchange accumulated points for cash, goods, or services on a complimentary basis or at discounted rates at a future date. So these are three main products covered. Now, what we are saying, we are categorizing them in three types. A, promotional gifts where entitlement occurs instantly at a specific point of time. Promotional prizes that are announced in advance to be awarded at a future date, mostly contingent on a draw or achievement of a target. And loyalty programs where obligation is accumulated over a period of time. So these are three accounting issues that we are talking about. Promotional prize gifts. An institution shall record an expense with regard to promotional gifts as and when incurred. We have not gone into too much detail about the promotional gifts. We just kept this thing simple, that with regard to promotional gifts as and when incurred, an expense should be recorded. And again, further details with regard to are in line with generally accepted accounting principles. So if we keep it in this standard, the purpose is to just distinguish the accounting treatment, not to define the accounting treatment separately from IFRS or from other generally accepted accounting principles. Promotional prizes. An institution shall record a provision against obligation arising from promotional prizes as and when there is an existing constructive obligation requiring the institution to award the promotional prize, whereby it is more likely than not that the economic resources will flow out of the institution and the institution is able to reliably measure the obligation, including fair value of in-kind promotional prizes. Now, this changed the recognition timing, and this is the timing we believe correct as per accounting and in line with the basic structure. So it is not accrual. Now, the difference is if you consider it like funding cost, it will be coming on accrual over a period of time. Now, these are at times material, at times not very material. But we are saying that accrual here is not allowed. You have to recognize it upfront as and when you have got into that obligation, where more likely than not, that is more than 50% chances that you will end up paying that price, and you are able to reliably measure that fair value of that price. So if including the in-kind, fair value of in-kind promotional prices. An existing constructive obligation referred to in paragraph 7A normally arises when an announcement is clearly communicated through explicit statement or consistent history of past actions for the award of the promotional prizes to a specific class or classes of customers, including investment account holders, and resultantly, the institution has created a valid expectation among those parties that it will honor its commitment. And the amount against provision for promotional prizes shall be recognized, charged as expense, except when the requirement of paragraph 12 apply. We have created a small exception under paragraph 12, where we have allowed that in certain very limited situations, this amount has to be recognized as a liability immediately, but it can be accounted for on the asset side or the expense side on a deferred basis, on the periodic basis. We'll come to that para later. Subsequent measurement, the carrying amount of the provision shall be reviewed at the end of each financial reporting period and necessary adjustment shall be made. Any changes in the amount of provision shall be accounted for as a change in accounting estimate and recognized as an expense or reversal thereof for the period, except where the requirements of paragraph 12 apply. Loyalty programs, we have kept it very simple in line with generally accepted accounting principles. The institution shall record a provision against obligation for loyalty program based on the points accumulated to the customers in line with the requirement of relevant phases, also considering the following very significant: probability of expected utilization of loyalty points by the customer, timing of utilization of loyalty points by the customer, and the amount. Sister Sarah and Brother Maj, TS capital, just make a note of it. Okay, the amount against provision for loyalty points recognized shall be charged as an expense. Subsequent measurement, the carrying amount of the provision shall be reviewed at the end of each financial reporting period, and necessary adjustment shall be made. Any changes shall be recorded as periodic expense or reversal of the expense. Now, classification of and charging of the expenses. The expense referred in paragraph 6, 10, 11, 12, and 13 shall be recognized as promotional and marketing expenses. Sister Saira, I think we made a note of it that we need to correct these para numbers. This is para 11. So we just need to correct these numbers. Explanation. The promotional and marketing expenses shall be generally charged to the owner's equity of the institution unless the promotional gifts, promotional prizes, and or loyalty program relate to the asset side or service-based products and the source of funding and attribution of expected revenue of the product is an investment pool, in which case it shall be considered as an expense of the investment pool. So for example, I just take a simple example. I'm having a car ijara promotion scheme. In the car ijara promotion scheme, I can have some prizes in that as well. That I can say that okay, out of 100 customers, one of them will get the car free, and 10 will get the registration and insurance free. I'm just giving an example because these type of promotional offers are also there at times by banks. If the underlying asset, its revenue, they are going to the investment account holders pool, in that situation, that marketing expense can also be attributed to that pool. This is in line with the comment by our respected brother Sadaqat, where he talked about that the marketing and staff salary can also to be allocated or not to be allocated according to those things. So according to the contractual requirements and according to the nature of the underlying assets and where the expense and income are to be attributed, it is an acceptable thing if it is allowed by the contractual obligation and allowed by the Sharia that if the underlying asset revenue is going to the investment account holders pool, then the relevant promotional cost can also go to the investment account holder pool. Let me mention again, subject to Sharia approvals and subject to contractual agreements with the customers. So you can, if the contractual agreement allows it, you can do it. If the contractual agreement does not allow it, then you have to take it out of the investment, out of the Mudarib share, that is the institution share. About para 12, generally the expenses in respect of promotional prizes shall be immediately recognized. However, there may be certain material prizes that can justify recognition of a corresponding asset to be amortized over a period of time to the extent that, so if we have a scheme of investment account holders where after 1 year there is a very significant amount of prize, or maybe there is a 3-year scheme where you have a huge prize coming after 2 years or 3 years, or every year there is one coming up. The announcement today will make it an obligation that you need to record today. But if you have justifiable reasons to justify that, according to this paragraph 12, that the benefit of that marketing will be passed on over a period of time, will only in this situation, a deferment of this is allowed. There was some argument about this one, that this treatment partly is not in compliance with IFRS, because IFRS generally talks about marketing campaigns to be charged off. But due to its unique nature, because it's not only a marketing campaign, but it's also about keeping the deposits till that point of time. So there can be some justification. So there are two justifications that we have kept in here, and we'd love to have your specific comments on this part as well. Number one, the promotional prize is part of a marketing and promotion campaign spanning over a period of at least 12 months, whereby the promotional prize or prizes is awarded at the end of or over the span of such period. And B, the total obligation in respect of promotional prizes is considered material, and the positive correlation is demonstrated between increased business and hence increased revenues against such asset to justify the matching concept through appropriate projections and financial models, provided that suitability of such production financial models shall be reassessed at each financial reporting date. So if you can justify that this marketing strategy of giving prizes over a period expanding 12 months, more than 12 months, and having offering of prizes can result in additional investment account holders fund capped and resulting in additional and higher revenues. In that situation, you can have this justification. We are not saying it's against IFRS or generally accepted accounting principles, but it is against the normal practice with regard to the marketing campaigns which are charged off. But this is not only a marketing campaign of one time, but it's a marketing campaign that maintains that you keep the deposits or investment account holder funds for the longer period of time. So from that perspective, account governance and AAOIFI accounting board considered that this is a preferred treatment, but we invite specific comments on this point as well. Then there are specific presentation and disclosure requirements about accounting policies, the provision, the movement of provision with regard to each one of them, vested and non-vested part, etc. And it is expected that this should become effective because we plan to finalize this standard with next upcoming meeting of the AAOIFI accounting board. So it will be issued within third quarter or maximum fourth quarter of 2024. So the effective date will be 1 January 2026. Early adoption will be possible from 2025. So we also invite comments on this effective date as well. So with that, I will stop. I'll open the floor for discussions and comments. I think as today as a bit now, thank you very much. The team has raised the poll on your screen. So we request all of you to kindly fill in the poll questions. One of the two you have to answer. So let's do this polling, and then let's wait for any comments that come up. So there are a couple of comments on the chat window, and we always request, I think somebody has put some comments in the chat window. We always request put your comments in the Q&A tab. It's for two reasons. Number one, it comes to our eye easily. And secondly, we keep a record of that. Okay. So just a request here, if you can put all these things in the question, but let me try to address this one. Who is the comment provider here? We have Mokhavi Ismail. I would like to thank AAOIFI for inviting me to join this public hearing. I have a few questions. First, concerning promotional gifts and prizes as follows appendices also, and two, it suggested the name of the word subject to be read under the name of, I think somehow, I'm really sorry, the comment is not coming very clear to me. Okay, I think let me do. First, concerning promotional gifts and prizes as follows appendices also in, I'm really sorry, but the text is not coming very clear to me somehow. Maybe it's a copy paste issue. Can you put your question again in the Q&A tab, but let me try to address. It suggested name of the words. Okay, maybe it's Arabic versus English text issue, which has completely scrambled the text. Can we allow Mokhavi Ismail to put the comment, put the questions by allowing to speak? Because honestly, unfortunately, it's very much now you are allowed to speak. You can speak, open up your mic and speak, please. Because unfortunately, this is all coming very much scrambled. We have another comment, brother Qazi Murtazali also has comment in the chat window. I always request everybody to put it in the question question answer tab. So Dr. Qazi Sahab, please let me try to respond to you here. So thank you very much, Qazi Sahab, for being with us in this important public hearing, and thanks for your contribution. Lottery system is not permissible, therefore we must suggest that prize money may be given only to small investor and not to richer investor. This would encourage transfer of money from richer to lower income group. This would also encourage the poor to save more. Criteria may be fixed at which group will to be eligible for prize money. Dr. Qazi Sahab, generally the price criteria and things are there. But let me tell you one thing on a lighter note, that if something is not permissible as a general rule, then it is not permissible even for the poor. The poor should also be subject to the same. You cannot say that, okay, I'm poor, so I can go into interest-based transactions. This is a very common argument that we listen in some of the markets about, what happens to the widows and their funds, and the widows and the old men, senior citizen funds. How you can say that if they invest in government schemes and all that, it is haram. Even if Islamic banks are there, but their rate of return is less, and government saving scheme, which is haram, their rate of return is more. So my argument is, dear sir, haram is haram, irrespective of whether I am poor or rich. yes, there is a situation of istarar when something, even eating pork will become halal at a point of time if somebody is starving to death. So that is something different. But I think, Qazi Sahab, I mentioned in the beginning, when we are developing this standard, we are not saying that we are willing to promote this thing. We are here to develop a standard to provide guidance that if by fulfilling the minimum Sharia requirements this thing is done, then at least you should follow these minimum Sharia requirements on the Sharia side, which are covered in the Sharia standard, and on the accounting, reporting, presentation, and placement part, which is given in this standard. Thank you very much, Qazi Sahab, for being with us and for your comment. Mokhawi Ismail, would you like to raise your comments, by speaking up?
There's another raised hand from Mr. Isa.
Okay, so please, Brother Isa, go ahead, please. Brother Isa Abdurrahman, your hand was raised earlier as well. Would you like to speak? I think his hand was raised from quite some time. Maybe it is by mistake. So again, the point is now we don't have too many comments coming up. Okay, we have comment from our dear brother Mughis Shakir. The marketing campaign for such while is to keep current customers, but also to acquire new ones. This gives rise to customer acquisition cost. The cost associated with promotional gifts and prizes should be carefully monitored and compared with the revenue generated from the new or retained customer. How does this standard allow for reporting and evaluating the effectiveness and efficiency of the promotional strategies? Dear brother Mughis, your point is well taken, but that effectiveness and efficiency of the strategy part is not the financial reporting element. It is like, even if it is not adding to it or adding to it, both situations, financial reporting requirement would not be there. But the first part of your comment, that it rises to customer acquisition cost, that is where we are talking about. That is where we are insisting that it's a customer acquisition and maintenance cost, and hence it should be reported as marketing and promotional activity, and not as a marketing and promotional activity, and not as a cost of funding like conventional. That is our main point. So for the first part of your point, fully agreed, and that is the purpose of the standard that we are trying to achieve. The second part of your point, agreed, but not a scope of an accounting and financial reporting standard. Thank you very much, Brother Mughis, for your point. Okay, so do we have any other comments? There is another comment again by Brother Mughis. Aspect of tax implication. The accounting treatment of promotional gifts and prizes may now have tax implication depending on the jurisdiction, which may require specific reporting or treatment of promotional expenses. Brother Mughis, again, a good point, but the point is simple. We try to develop our standards normally on tax neutral basis, which means that tax will be addressed according to the respective country's tax records. It is an expense, and so it should be allowed. So in some of the situations, our accounting treatment will be beneficial for the institutions because they will record the expense upfront, and then in that situation, hopefully that expense will be allowed upfront. In some restrictions countries, there is a restrictions on the limits of the of different type of companies of having marketing expenses beyond limits. So for example, in some countries, pharmaceutical industry, some other industries, like, have a limitation on this part, that they cannot go in with regard to marketing expenses beyond a limit of their revenue as a percentage of revenue. That is a minor risk that can be there in some of the countries, but on an overall basis, the aspects of tax implications would be neutral, and in some situations, they may be positive as well. Your second part in this is what about zakat considerations? I think zakat, this will not be applicable on zakat part. It's a liability which will not be adjustable for zakat purposes like other provisions. So we create a provision. The zakat, normally the provisions till the time they don't turn out into a liability at the beginning are not adjustable for zakat purposes in line with the official Sharia standards. The upcoming guidelines on the accounting side of the zakat also clarify that most of the provisions are not adjustable for zakat at that point of time. Thank you very much, Brother Mughis, for your interesting points. Now we can see again Mokhawi Ismail raising the hand. So please, you are allowed. You are allowed.
Yes, I do. Are you hearing me?
Yes,
Mr.
we can hear you, and we are sorry somehow
Yes.
the comments in the chat box got scrambled. So
Yes.
you can put all your points one by one here by speaking up.
Thank you very much for my first question concerning the promotional gifts. It's the introduction to the rationale for issuing this standard. It is the fourth line, the word the board, which is the first time to be mentioned. So I think this is near need to mention that is
define the board. Define the board.
Yes,
okay.
yeah. Which board?
Okay, just give me a second. Give me a second. Thank you very much for correcting us.
This is
Let me.
IN2. IN2.
IN2. Thank you very much.
Yes, in the same paragraph.
Let me just
to the title of the standard after the word subject, the last line, to be under to add under the name of or the title of promotional gifts. Because this is the place where.
Okay, thank you very much. Thank you very much for both points. The first point, the board again, first, since it is being used for the first time in introduction section, Sarah, if it was used in the preface section, it does not work. Maybe it was defined in the preface section. No, it should, since we have used the term board for the first time, we need to do it. Your second point was about correcting in the same, about this part. Can you just mention the line number again, just to make sure the team makes note of it?
Yes, to mention the title in the last line to be added under the name of promotional gifts and prizes.
Okay, thank you very much. The next point. Thank you again for correcting us. Allah bless you for all the support. So next point was.
So the other points concerning the next standard, the other standards, the points, other standards, which is about the financial reporting. Thank you very much.
Okay, thank you very much.
Thank you very much. Thank you very much.
Thank you again. So now we reach around, it is 10:35. As we were having a little bit lesser attendance today, so we started a bit late as well. And since still the attendance today, unfortunately, has been on a lower side. So as I mentioned briefly earlier in the beginning, that we may decide to take only one public hearing today instead of both standards. So Brother Majd, I think at this time we need to make a conclusion, and we need to thank all our participants and conclude, because holding the second public hearing will be tight on time. And we will be having lesser number of participants today. So I'll prefer to defer that public hearing to another appropriate date when we can have a larger number of audience and we have reasonable time available. Yes, so please, sure. Brother Majd, back to you.
Sure, thank you very much, Brother Omar. We'd like to, on behalf of you, all of you, and before we go to the poll,
yeah, exactly. Just conclude the poll also, please. Yeah, you just comment on that, brother.
Yeah, please. So the poll, according to your answers, question number 1, should we retain all types of promotional gifts and prizes? 11 out of 25 said yes. And for the other question, should we limit the scope to encompass only promotional gifts and prizes? You said for 14 out of 25 said yes. So as a percentage, we have 56% versus 44%. Nayar saying. So in this situation, we are here. We have much positive with the second question. We will take that into the working group, and we will consider that later on. But for closing, we'd like to again thank you all. Thank all the participants. Thank our partners in the State Bank of Pakistan. We'd like to thank Mr. Rahman Mustafa Ansari, AAOIFI Secretary General, for the insightful and comprehensive presentation of the exposure draft and the answers provided to participants' questions and comments in today's public hearing session. In conclusion, we would like to extend sincere thanks to all our valued participants from across the Islamic finance industry and beyond for having taken part in today's public hearing on the exposure draft of gifts and prizes. And as we mentioned earlier, we have confined today's session to gifts and prizes with the hope that in the near future, inshallah, we will hold the second leg of the planned session on Islamic investment institutions. Your comments and suggestions are essential for us, for sure, in improving and fine-tuning the exposure draft for the purpose of finalizing the standard by AAOIFI Accounting Board for final issuance. As I mentioned earlier, all relevant comments and suggestions will be compiled and presented to the respective working group to consider and make the changes it deems appropriate to the exposure draft. Thank you all again, and see you in the upcoming future public hearing events on AAOIFI Financial Accounting Standards. Allah bless you all. Assalamu alaikum wa rahmatullahi wa barakatuh.